Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Thursday, February 13th. This will be the last one for the week and the last one for Valentine's Day. If those of you out there who have a significant other, if you haven't bought your flowers or made your reservations, make sure you get those ready. Valentine's Day is tomorrow. Now we're going to take a look at British American Tobacco. This is out of the consumer staples sector. Before we get too far in the video, if you do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Hit the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. A lot of you out there watching the video seem to enjoy the videos, but you are not subscribed for whatever reason. So help grow this channel and hit that subscribe button. Make sure you click the notification bell as well so you're notified whenever I put out any new content. I typically am here pushing out these stock pick of the day videos Monday through Thursday when the market's open. We take a look at a company's stock. We run it through the screener on a stock that's pulled back on the day. See if it makes it onto my watch list. We'll run through that screener here in a minute as well. There's the thanks button down below if you'd like to buy me a cup of tea. And a special thank you to all the subscribers and the viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. You can pause this and go through it, but this is the criteria we will be running through on this video and all of the Stock Pick of the Day videos. It must meet 5 of 8 to make it onto my watch list, and just because it makes it onto my watch list does not necessarily mean I am investing. It just means I'm interested in doing more of a deep dive into the financials of the company. A lot more to look at than just a simple screener here. Again, thousands of stocks in the stock market. This is just a quick way for me to go through them on a high level to see if I want to spend any more time doing a deep dive into the financials of the company. And if you don't want to do those type of deep dives into the financials, looking at the balance sheet, the income statements, stuff like their debt to equity ratios, price to book, price to earnings, are they paying down debt? Is their revenue growing over time? Are their margins expanding? How the company overall looks, then you shouldn't be buying individual stocks and you should stick to ETFs and index funds. And nothing wrong with that. Warren Buffett would actually recommend for the average investor just buying something that tracks the S&P 500. So an ETF or an index fund like VOO or SPY that track the S&P 500 would be what Warren Buffett recommends for most investors. And nothing wrong with that at all. You're going to match the market, get around 8 to 10% a year returns, and go on about your business the rest of your day and not have to worry about it. Now, jumping back over to British American Tobacco, you can check them out on their homepage if you're interested, www.bat.com. That's www.bat.com. That is their homepage where I pull this information from. We are BAT. We are a leading multi-category consumer goods business. Our purpose is to create a better tomorrow with a vision to build a smokeless world, a world where smokers make a switch to better by migrating from cigarettes to smokeless alternatives. We hope We Are BAT helps you understand who we really are, our clear purpose, how we operate, and what it's like to work for our company. And it's kind of funny to hear a tobacco company talk about, a better world and a smokeless world whenever they are the ones who started the smoking trend to begin with. But that maybe is another video for another day. And the reason we are taking a look at British American Tobacco, ticker BTI here, again, out of the consumer staple sector. I would argue it should be out of the consumer discretionary sector since, tobacco is not really a staple product, but I guess there was a time maybe more people were smokers. And still some people are. But the reason we are looking at them, down 7.34% on the day. Big drop, close out the day at $39.60. Looks like they're up slightly in the after hours, at least when I pulled this information from the internet there. And Yahoo Finance is where I'm pulling this information from, just one of the sources I do go to. Now, they have a 52-week low at $28.25, a 52-week high of $42.74. They are still closer to their 52-week high than their 52-week low, even after a 7% drop. This one did run up quite a bit this past year, I think, along with some other tobacco companies. Market cap of $87.129 billion, a beta of 0.29. They did not have a PE listed. I didn't bother to look anywhere else either. You'll probably understand a little bit more why that is towards the end of this video. EPS, earnings per share, is negative at $7.75. I don't like that. That's not good. Forward dividend is very high at $2.99. I believe their quarterly payer. We'll see that here towards the end of the video. Very high starting dividend yield of 7%. Earnings date was today, so I'm assuming that's why the drop. If you're interested in this company, go check out their earnings report. I don't cover those on this channel. Ex-dividend date, December 20th. So they did pay out on February 6th if you were a shareholder. So if you were to buy them now, you would get the next dividend, though you're going to have to wait a few months since they just paid out. 1-year target estimate of $40.96. So they see it going back up from where it is slightly, but not quite getting back to its 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. Just a quick back check there, or initial check, I mean. 5-year dividend yield average is 7.83%. We compare that to the current 7%, or over here where it says forward, 7%, same number. Since their current dividend yield is lower than their 5-year average, that speaks to overvaluation, according to dividend yield theory. Now, we're going to see a little bit of discrepancy here. They're saying, according to Yahoo Finance, where I pulled this info from, a payout ratio of 59.13%. Another source I go to is stockanalysis.com. They have a different one. We'll see that at the end. I did not look for a third source, but this would be one of those times where, since there's a conflict, I would look for a third source to verify which one is correct, maybe even a fourth. We went over their ex-dividend date, dropping down. I want to look at free cash flow. I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, pay a dividend, which this one does, and raise that dividend over time, which as dividend investors, we should want that. Now, going back here to December 2020, they had $9 billion in free cash flow. 2021, they were down to $8.9 billion. 2022, back up to $9.7 billion. And December 2023, up to $10 billion. So it looks like, at least in the last, well, maybe not so much there, a little bit of up and down on their free cash flow. They are repurchasing shares, 18 million in 2020, 2021, 82 million. 2022, they had a good year there. It looks like 2 billion shares, but then back down in 2023 to 110 million. So even though their free cash flow was up, their share repurchase was down significantly. So again, looks like they have up and down free cash flow here. Jumping over to stockanalysis.com, another source I go to for information. Again, not affiliated with stockanalysis.com or Yahoo Finance, just two sources I go to for information. They don't have anyone that's really looking at this, but they do call it a strong buy. So not sure who's calling it a strong buy if they don't have any analysts giving it a price target. Didn't have price targets either, so you'd be stuck with the one from Yahoo Finance on the previous page, again, unless you go for a third or fourth source for information. Again, that's why I do recommend more than one source, more than two even, to make sure the information you are getting is accurate and up to date. Stockanalysis.com and Yahoo Finance are just two of the sources I use. You pick any sources that you like. Now, I like to look at statistics and look at the return on equity and return on invested capital. I like to look at a lot of other statistics as well, but these are some on a high level I like to look at. I like 10% or better for these. The return on equity is 6.18%. Return on invested capital at 1.91%. Much lower than the 10% I'm looking for there. They did not have EPS growth forecasted. I like 5% or better there. Typically, their revenue growth is forecasted at 1.52%. All right, so they are a quarterly payer. See, here's where the discrepancy comes in. They're saying, according to stockanalysis.com, that the payout ratio is very elevated, not around 50 to 60%, but at 174.57%. That's very high. Should be worried about a dividend cut whenever you see a payout ratio up that high. Dividend growth is high at 6.04%, high single digits. Now, if it is a payout ratio of 174%, I would question why they're continuing to raise that dividend, but that is in question, so I would verify the payout ratio. They're saying only 1 year of growth. Again, I don't know if that's completely accurate. Whenever I look at the numbers down below, we'll see that here in a minute. Buyback yield is negative at 1.21%, so you'd want them to be buying back shares at more opportune times, not when they're overvalued. Shareholder yield is positive at 6.5%. They do pay out on the February, May, August, November timeframe, which is off cycle for most companies. Most companies pay out on the March, June, September, December timeframe, right? So they're at February, May, August, November, which gives you some dividends on those off-cycle months. Dropping back down here to July 2022, they were paying 73 cents and some fractions of a penny. Looks they raised it up December 2022 up to 74 cents, but then back down in March 23 to 70 cents. Carried that 70 cents and some fractions of a penny through till March 2024, back up to 74 cents. So maybe there is just 1 year growth. Maybe they dropped down here in 2023 and then picked it back up. But it looks like they're up and down. Maybe they have some based on earnings or cash flow, whatever they're doing here. But it doesn't look like it's consistently rising over time. It does look like they've had some downturns overall. All right, let's quickly run this through the screener. Not a lot to see here, not a lot of green at all. Understand the business, right? They're a tobacco company. They're selling you tobacco products, whether that's smokeless or cigarettes. To me, makes no difference. It's tobacco. Growing free cash flow. Nope, not over the last 4 years. Looks like they're up and down there. Growing dividend. It does. You can give them a check there. It does look like, apologies, it does look like they have growing dividend, right? 6%. So at least over the last year, they're growing the dividend. I didn't give it to them because it does look like they're up and down, and I don't really count 1 year unless they've just started recently raising dividends. I don't typically give a company credit for just 1 year of growth, though technically I guess it is. Dividend payout ratio under 75%. Some discrepancy there. I did not give them a check for that. Check valuation based on dividend yield theory. They are potentially overvalued according to dividend yield theory, so no check there. It is not within 15% of a 52-week low, so no check there. Return on invested capital, return on equity are both under 10%, so no check there. And earnings per share growth is not listed, so no check there. So they get 1 out of 8. Wouldn't make it onto my watch list. And if I'm being honest, they wouldn't make it onto my watch list regardless. And this is why. So this is my dad, Brad. This picture's actually from a couple years ago. He is 68 years old. And if you're wondering what happened here, this is from smoking. He's on oxygen. He tried to light a cigarette, was hiding it from my mom and brother, and they were there. It's around Christmas time, a couple years back, and set his oxygen on fire, which stuck to his face and set his face on fire. His hand, his chest, burned him up pretty good. Inhaled some of the plastic in his lungs, hurt him pretty bad. Not that he's not hurt already. When he was a kid, companies like American Tobacco pushed these products to kids and adults. They would even have commercials, where they'd have a doctor come on. As 4 or 5 doctors recommend Camel filters, which is what he smoked. Camel filters in a box. And I remember that explicitly because when I was a kid, my brother and I used to steal cigarettes off his fridge and got caught smoking them. He caught us and he sat us down and made us eat them. And I mean eat them. Cigarettes, butts, the whole thing. And I never smoked again. And I wish he would have quit then, but he didn't. If I'm being honest, I know that he eventually choked to death on his own phlegm. His lungs are quickly going pretty bad. Don't do this to you or your family. Your family. Apologies for that. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Not being rude, but I don't really care for those of you out there who, not that I don't care for you, but I don't care about your opinion. Of my opinion about companies like this. So if you want to drop a comment, you're a smoker and you don't take kindly to my opinion, so be it. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like American Tobacco you'd like me to cover in the Stock Pick of the Day series, I will cover it, but it would never be something that I bought. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for tuning in. Thanks for stopping by. I hope you have a great weekend. Again, don't forget, tomorrow is Valentine's Day. So if you've got that significant other out there, make sure you have taken care of that. And for those of you who are smokers, it's not just about you. It is about your family as well. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm willing to share my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select your criteria, or seek the advice and counsel of a certified financial advisor.